Did you know that the average small business has only 27 days of cash buffer, and 82% of small businesses fail due to poor cash flow management? Are you prepared for the unexpected? Welcome to Dollars and Dreams, the podcast designed to empower you to take control of your personal and business finance. You know, the very thought of money and finance can often send chills down your spine and stir up fear of the unknown. But let's change that narrative together. Through this podcast, my goal is to not only to provide you with useful information, but also to inspire and motivate you to take action towards your own financial goals. Let's rewrite your money story together. Hello and welcome to today's episode of Dollars and Dreams. Today's episode is about cash flow, and before you switch off, it is such an important thing for small businesses as well as large businesses. But of course, Dollars and Dreams is about helping small businesses run their business better. So today I want to go through cash flow, why it is important, and the mistakes that I see with so many of the businesses that I work with. So firstly, I just want to go through and explain the difference between cash flow and profit, because the comments that we get all the time here with our clients is, oh, my profit's great, but I've got no money. Where's my money gone? And then they'll say, how do I increase my cash flow? And so the concept of profit is what most business owners work with, but that's very different to cash flow, because cash flow in its simplest form is money in and out of your bank account. And as accountants, we haven't done our clients any favor because we do concentrate on the profit and loss with clients. Most clients know how to run a profit and loss from their accounting software. And of course, tax is paid based on a profit and loss. So profit is what we are drilled to always work with. But of course, the sustainability of your business relies on cash flow. And I said in my introduction that 82% of small businesses fail due to poor cash flow management. And so this is the reason that you as a small business owner really need to keep an eye on your cash flow. The reason I guess that most of us don't look at cash flow is it can be actually quite difficult to determine easily from your own accounting software, because again, our accounting software, like the tax office, are drilled into running a profit and loss statement. So you've heard the saying, revenue is vanity, profit is sanity, but cash is king. And the reason that that saying has come about is because a lot of businesses, not just small businesses, will concentrate on their revenue. And we see it all the time. They'll go, my revenue's gone up from, 200,000 to 400,000. I've doubled my revenue. But they haven't kept control of their cash or their expenses. And so it's irrelevant what your income is. Certainly it makes life easier if your revenue is increasing, but it's not a key metric, because quite often in the stages of business growth, as a business is increasing its revenue, its costs are increasing disproportionately to that revenue increase. We have on our website the 6 stages of business growth, if you want to have a look at that. And it does show in each of the stage what the difficulties can be with each of those stages. So let's go through some of the misconceptions that we see quite often. And that is many new business owners, as I said, confuse profit with cash flow. So your profit and loss, of course, is your income less your expenses. And some of those expenses are non-cash expenses, things like depreciation. And of course, depreciation is the write-off of an asset that you may have purchased in year 1, but you actually claim it through depreciation in the next 5 years. So profit isn't necessarily a good indication of where your cash sits. Certainly, we would always want our profit to be as high as we possibly can, but that's a lot to do with your expense management. But as small business owners, we really need to get away from just looking at what our profit is. And profit's a good metric, don't get me wrong, but it doesn't take into account other flows out of your bank account. Certainly, you'll pay tax on the profit. And of course, tax doesn't go through your profit and loss either, but it comes out of your bank account. So as small business owners, we always say to everybody, look at the movement of your bank account to see how you are. Cash flow, if you do a cash flow projection, so that's looking at the future. And of course, as accountants, we tend to look at the past a little bit, because when we produce your financial statements at the end of a financial year, that financial year may have been 8, 9, 10 months ago. And if you think about where that financial year started, you're looking at something that happened in your business almost 2 years ago. So it can have quite big ramifications, because we always find with businesses that have cash flow issues that they go downhill pretty damn quick, because whatever's created the cash flow issue in month 1 will also be happening in month 2, month 3, month 4. And so if we're all relying on your accountant to produce financial statements for you to determine what your profit is, or even to look at what your cash flow issues are, then you potentially will be one of those 82% of small businesses that fail due to cash flow issues. So the reality is, profit on paper is very different to the realities of your bank account. And if your customers, if you've sold goods and your customer hasn't paid you, that income will show on your profit and loss, but it won't show in your bank account because your customer hasn't paid you. And when I talk to clients about this all the time, they'll go, oh yeah, Jem, but we're a small business, so we report our income based on cash, not on accruals. And of course that is the case, but most of your software you will look at on an accruals basis. The other thing is that most small businesses don't look at their profit and loss. They just look at, I've had a $10,000 sale, or they will look at what invoices they've sent out to work out what their revenue is, because we've been drilled to increase revenue. And as I said earlier, increasing revenue is great if we increase that in conjunction with decreasing our expenses. So keeping an eye on cash and making sure that you've got cash in advance ready for those expenses that are going to come in is key to having good financial management of your business. Keeping an eye on the cash also makes sure that you have enough money in the bank account to pay the bills that are coming in the next month or so. And so that's why we say to everybody, cash is king. The other thing that you need to keep in mind when you're looking at cash flow is that when you buy inventory, so inventory will sit on your balance sheet, not in your profit and loss, so that you've gone and bought whatever product you sell. It sits on your balance sheet, but it has come out of your bank account. And so we always say we should look at what we call the cash conversion cycle. So the idea is you don't want your inventory sitting there for very long. And we see this in retail stores. You know, they have the 50% sales or the 30% sales at the end of each season. So if they've spent $100,000 on clothing and shoes, and for whatever reason, whoever the buyer is didn't get the buying right, and they've bought the wrong type of clothing, or they didn't buy enough of the right sizing, or whatever it is that caused those products not to sell, the retailer will do a 50% off, because that then it basically recoups what they've spent. And they can't have a floor full of the wrong seasons of clothing. So you can imagine if it's let's do a surfwear shop, and we've got all these bikinis, board shorts, tank tops, all summer clothing, and all of a sudden it's now winter. And of course everybody's coming in wanting to buy hoodies, jeans, pants, long sleeve shirts and things, and half the floor is taken up with the summer stock. That is taking up valuable floor space, and retail floor space is really expensive. So you need to have products on the floor that your consumer wants to buy. And so those swimwear or summer type items are going to sit there really until the next season comes around and we click back into summer. But of course, the swimwear that was in last year is not going to be in next year. Board shorts will be slightly different. So those things that you've got sitting on your floor in the wrong season will be the wrong style when summer comes around. So as I said, what they do is they do the cash conversion cycle. So they will sell off that out of season product at a significant discount to recoup the costs that they incurred when they bought that. They've lost the profit margin, no doubt about it, but at least they're getting back the cost of that product. And so the shorter cycle you can have with your conversion cycle, the better off you are. So if you've spent money to purchase goods today, so we'll call today day one, product comes into your business on, let's say, day 7, you can then get it ready to be sold to your consumer, let's say day 10. All of a sudden now you've got 10 days that you've been without the cash for that product that's sitting on your floor. If you can convert that to income within the next week or so, then you've had a really quick conversion cycle and the money is back in your bank account. But if you've got stock that sits there, whether that be in the building construction industry, retail, even hospitality, if you've got stock sitting there and it takes 120 days before it converts back to cash, you've now got a cash flow issue because in that 120 days, you've still had rent, electricity, insurance, wages, whatever it is that costs you to run your business. So it is really important as a small business that you get your cash conversion cycle to as low as you possibly can. And of course, if you have poor cash flow management, there's a ripple effect, because if your money is tied up in stock or tied up in being a short-term lender to your consumer, so you issue an invoice to somebody and, let's say you've got a 7-day terms of trade, and your consumer hasn't paid you in the 7 days, and they're now 14 days, 21 days, 60 days, 90 days, you're being a short-term lender to your consumer because you've raised an invoice, they're using whatever it is that you sold to them, and they haven't paid you. Now, if you go and buy a home and you live in a home and the bank's lent you money, they're charging you interest on a daily basis. So as a small business, if you've put an invoice out to somebody and they haven't paid based on your terms of trade, you have actually become a short-term lender at 0 interest. And so that then pushes the costs onto you because you may then have other borrowing, so you're paying interest to a lender. You may have missed opportunities because you don't have the cash to buy something else that could make your business better. And it does impact on your growth opportunities. It can impact on you being able to pay for your stock and get a discount because, of course, some of the big suppliers will give you discount if you pay within their terms of trade. So if you've sold things to your consumer, they haven't paid you on time, you can't then pay your supplier and take advantage of any cash discounts or early term discounts. So it is important that you keep in mind the ripple effects that happen when you don't keep an eye on your cash. And of course, the biggest thing that we see with small businesses when there's cash flow issues is the stress and anxiety. And business should never be about stress and anxiety. There is going to be times that you're busy and you will feel stressed, but anxiety shouldn't be part of running a small business. And of course, if you're wondering how you're going to find the money to pay wages next Tuesday, if that's when your wages are due, because somebody hasn't paid you or because you haven't had control of your cash, then that becomes a really stressful situation for any business owner. So if you're one of those business owners and you have issues with your cash flow, please reach out to us here at jenrichardson.co and we can give you a bit of a guiding hand on the things to look at, what you can do, and how you can potentially increase that cash flow into your business by taking some bold and really brave steps. And sometimes as small business owners, we often wonder if we're making the right decisions. We look at the decisions we're making and look at the potential of what could happen, not necessarily what will happen. And so it is important to look at your business and sometimes looking at it from another point of view or through somebody else's eyes can make a difference. So if you're one of those small business owners that do have what they perceive to be cash flow issues, or you're feeling anxious about how you're going to pay your bills, please reach out to us here at jenrichardson.co. I've got a great little 4-week business intensive called Freedom Formula, which is starting on the 1st of July. And this will be a great one for any small business owner because it's about how to take control of your own business, how to look at what's working, what's not working, and what things you can put in place. So reach out to us here and come join me over at Freedom Formula, which will start on the 1st of July. So the other thing with cash flow is the worst case scenario is that your business will fail. And depending on the structure that you are in, so the type of entity, whether you're a company, a sole trader, a partnership, or a trust, you potentially could have some of your assets on the line. You could lose your family home, you could lose any investments or cash that you have. And so being in the right trading entity is also a really important thing for small business owners. And that is my podcast next Tuesday is all on the trading entity. So that's probably a great one for you to listen to if you have any concerns about the trading entity that you're in. So if you have cash flow issues, and let's say, you're still in the very early stages of those cash flow problems and you're not quite sure what to do, you're keeping on top of all your day-to-day bills, but let's say you can't pay your tax office and your BAS is due, you have issues. You'll be paying interest and penalties to the tax office, and that means that you have now a cash flow issue, which is now exasperated because you've got to pay more money out than you needed to pay. So that puts us into a downward spiral. So wherever you have cash flow issues and you are starting to struggle, you'll find that you'll be paying your suppliers late. So all of a sudden they probably have some penalties. They won't give you the discounts that you may have got because you had good trading terms. You will have penalties and interest for late payment to the tax office, potentially to ASIC if you haven't paid things to them, or any other places. You may not have paid your loan repayments, in which case then you may get a penalty from your lender for not meeting your minimum payment. You'll pay interest on money that you didn't need to pay. And so it does then become a big black hole that you struggle to get out of it. You'll have difficulty getting any credit because you'll have not a great credit report. You'll have issues that you have debts that a lot of lenders definitely won't give you money if you have tax office debts. And so it is important to make sure that you keep on top of it. So some practical tips on how to improve your cash flow. And this is one that we talk about all the time. And I've just alluded to that in that earlier part that we've been talking about, is the invoice and collections. So the importance of making sure that your invoices to your consumer is paid on time is really important. And having super clear payment terms and follow-up procedures to ensure that people pay. A lot of software now will send a reminder the day before. So have a look at the software that you're doing your invoicing through, because quite often just getting a prompt from you to your consumer, hey, your invoice is due tomorrow. We look forward to receiving that money. If you have any difficulty, please reach out to us today. sometimes getting that will just prompt people to pay, because quite often people are busy. Now, whether that's you, your consumer as an individual, or whether it's a business, we quite often get busy and we forget that something's due because we're doing our day-to-day life. Getting that prompt either by SMS or email can be just a great reminder for your consumer to actually pay you. And, I did this a couple of weeks ago, and I'm pretty embarrassed to say this. We had somebody doing some plans and things. We're looking at doing just a new kitchen and moving a few things around inside our house. And we had this lovely lady drawn up plans and everything. We'd paid the part payments and things. When she'd finished, she just sent me the final invoice. The day that I got that invoice in my emails, I was actually driving down to the south coast. We live on the east coast of New South Wales. I was driving down the south coast for my nephew's wedding, saw that flash in, but jumped in the car. It was a good 4.5 hour drive. Got down there and all the family and friends, we were all together. So, of course, we spent the afternoon in the courtyard, the motel that we're at. We just had a few drinks and things. That night there was a dinner. The next day was the wedding. The Sunday, driving home, got home Sunday after lunch and had to do all the things. And, of course, Monday, back into the office, and my week just kept going. Now, this lady had 7-day terms, which meant I needed to pay that Friday that I was back in the office. But I just got busy. It got buried in amongst, I get a couple of hundred emails a day. It got buried in amongst my emails. It was literally 2 months later, I woke up in the middle of the night and remembered I hadn't paid her. So the next morning I jumped on and I did an OSCO payment to her, sent her an email and said to her, I am so sorry, explained how it happened. And I said, but why did you not chase me on day 8? And her response was, oh, I knew you'd pay me eventually. And that's lovely for her. And it was very nice that she didn't want to hassle me because she knew that I was busy. But I had her money for 2 months. And it was only when, I don't know whether she would have at some point chased me, but it was only when I contacted her was that the first option that she even had any contact with me since she sent that invoice. And I don't look after her. She's not my client, but I said to her when I emailed back, I won't say her name, I just said to her, you need to chase people that pay you. If they haven't paid you the day that it is due, you need to send a reminder, you need to send a SMS or something, because she obviously had commitments because she works, she has a business, and she has her own personal life. So keeping control of your invoicing is super, super important. Expense management is looking at how you spend your money. And quite often, as I said, people get this increased revenue. When you have increased revenue, you'll need to increase your stock or your inventory. You may have to move to bigger premises. You may have additional wages. You may have additional insurances. So keeping control of your expenses as you expand is also important. And part of being a small business owner is you really do need to consider your expenses on a monthly basis. Everything that comes in, can I get better product for the same price, which means you may have less returns or you have greater client satisfaction, so they may come back to you more often. Can I find a similar product at a cheaper price with still the same quality control? Is that supplier the right supplier for me? And that's whether it be your insurances, your electricity, your telephones, your internet provider. So expense management is really important because an expense goes out straight away basically, except for perhaps your inventory that might be on 7 or 14-day terms. So looking at your inventory levels, don't keep surplus stock. Look at if there is a way that you can get stock in when your consumer wants it or in a short turnaround. So depending on your industry, you need to have stock there, or you may be able to do it on consignment. So when they order, you get it shipped directly to them. And that's certainly an option, particularly if you're in an industry that the stock is quite big. So I'm thinking there potentially if you're a plaster supply company, sheets of plaster are huge. They've got to be stacked correctly. They've got to have moisture control and things like that. So if you can just keep that at a short turnaround time, then you will have better expense management. Forecasting your cash flow as a business owner is really important. So you need to look at what's coming in and what expenses you've got going out, and forecasting those ins and outs of your bank account will relieve that mental load that you have from running a small business. And it does take time to do a cash flow forecast report, but depending on the accounting software that you and or your accountant use, sometimes it's not too bad. There's lots of software now. It won't be perfect, no doubt about it, that will do a forecast based on the past. And so what it will do is they'll just say, right, well, this is the last year or the 2 years of what's happened in your business. And then it uses AI and it'll forecast what's going to happen in the next 12 months. Never take that on face value, though. You should always look at it and say, well, actually, I know I've got a really big expense coming up because I need to buy a new piece of machinery, or I can look at I've got a big contract coming through and I need a lot of inventory, etc., etc. So just make sure that when you do your forecasting for your cash flow, don't take what your software does if you use software. If you don't use software, you'll always start with the basis of the last 12 months. So just project that forward and Excel will do it for you, or you can do it on paper if you're that way inclined, and just do some sort of projections. It will give you the highs and lows. It will give you advanced warning of what issues that you might have. And that's particularly important with any industries that are in seasonal fluctuations. So I talked about earlier the surfwear shop, the seasonal fluctuations for them obviously is leading up to Christmas. They have a big surge in their income because people are buying Christmas presents for their kids and their partners. People are also shopping, doing the one for them, one for me type thing. And so looking at that seasonal fluctuation, if you're in primary production, for example, the seasonal fluctuation of your product can make a difference. If you're in hospitality, the seasonal fluctuation of spring and summer when most people want to go out. Winter can be quite tough for anybody in hospitality. And of course, the big cash flow that you need comes before you have that cash flow into your business. So you need to anticipate that and make sure that you've got something in place so that you've got the money there to buy the stock before you sell that. So of course, with the surf shop, they've got to buy in that stock before the Christmas rush starts. So they've got to get it in. They may have some good terms with some of their suppliers that they pay on 60 days, but most people don't do that. The other thing, we do a lot of work with building and construction clients here. And of course, we've all heard in the media over the last few months of building construction companies going under. Most of those have been because of cash flow issues. Building costs have been going up significantly in the last few years, and they haven't passed that on to their consumer, maybe because their contracts didn't have it, but that's poor planning, because we always have to anticipate that things are out of our control, and particularly building construction where they're signing contracts 6 months before they start work, 12 months before they start work. You've got to make sure that you've got clauses in your contract to pick those up. And I just talked briefly about accounting software and invoicing tools. And for cash flow management, we get people quite often will say, I don't want to pay for Xero, it's $100 a month or whatever it is. But if it can save you money, it's a cost that you should do because it gives you knowledge, and knowledge is power. So don't be afraid of spending money where you need to spend money to help you run your business better and streamline the process. Anything that can give you knowledge to make really good decisions on your business is a great thing to spend money on. And I've seen a lot of comments lately on, look, we're a Xero firm here and I think it's got great capabilities. But I've seen a lot of comments in Facebook groups where small business owners are saying there's a price rise coming 1st of July. It's a reasonably significant price rise from Xero. But people are saying, what one's cheaper? And people in there that are other small businesses are saying, oh, do it all in Excel. You just keep track of your things. But if that takes you a couple of hours a week to do, you've got that lost either personal time with your family, or time in your business to make it run efficiently. So don't just look at the cost of the outflow for this accounting software. And I'm using Xero as an example, but all software is the same. All will have some capabilities, but don't look at just the cost. Look at what reports you can get out of it to make you run your business better. And of course, one of the things that a lot of people look at is the metric of your profit. I want to make sure that you understand that everything that goes through your profit and loss is not a cash flow issue. And tax, as I said earlier, is the perfect example. Our BAS statements come around either monthly or quarterly. We've got to have the money there. None of that goes through the profit and loss. So keeping control of your cash can be as simple as creating separate bank accounts. We always say to everybody that has difficulty managing their cash to create a bank account to put those monies aside for your superannuation, your tax that you've withheld from your employees' wages, moving the money across for the GST that you've collected, moving money across for the income tax. And it's really important as small business owners that we're always anticipating what our tax bill is going to be so that we can put that money aside, because not all the money in your bank account is yours. Some of it may need to go to the tax office when you lodge your tax return. So that's it for today. Hopefully I have impressed upon you the importance of cash flow for your own business and not just looking at your revenue or your profit, because it doesn't give you the full picture. Doing a cash flow forecast is one of the best things that you can do for your business, because nothing is more satisfying or relieving as a small business owner than knowing that when you have to pay a bill, the money is there and it hasn't impacted on your own business's growth or potential to be better at what you do. If you want to come and join me in my 4-week business intensive that starts on the 1st of July, cash flow forecasting is one of the things that we will look at, and we'll go through lots of other tips and tricks to help you run your business better, and obviously to give you that mind freedom that is so important for small business owners. One of the things that I hear all the time is small business owners is that it's really stressful, and it doesn't need to be if you get help along the way. So I'll put the link for Freedom Formula, my 4-week intensive, in the notes where you're either watching or listening to this podcast. Or, of course, you can jump over to our website, jenrichardson.co, and sign up. And I'll see you on the 1st of July with the Freedom Formula, where you can get control of your business. So that's it for me for today. I thank you for listening to me. Don't forget to like and subscribe so that you can get notified whenever I drop my next podcast. Have a great week, and I'll see you next Tuesday, where we're going to go through the right trading entities for your small business. Thanks, and I'll see you soon. Remember, the advice shared in Dollars and Dreams is general in nature, and it does not consider your own personal circumstances. Dollars and Dreams is for educational purposes only and should not be relied upon to make investment or financial decisions. If you need more help, please reach out to a financial advisor for tailored personal advice. Don't forget to click that subscribe button so you don't miss out on future content. And please leave me a review. Your feedback really helps me to reach other people chasing their money dreams. You can find me over on Facebook and Instagram to connect with me. You will find the link in the bio or head over to my website at jenrichardson.co where you will find free content and learning tools.